What's up, YouTube? Eric here from MajorLeagueTrading.com, and I apologize. It is late, 10:37 p.m. as I'm kicking off this video, but some life things got in the way here today. But we're gonna run this video, and it might get a little bit lengthy. I'll be upfront and honest with you guys on that, but I want to cover like just everything, like start to finish, A to Z. Essentially the whole thing here from today. I want to break down my thought processes, the things in which I was typing in the Discord, as well as what I put in the morning write-up on my 17.25 point trade today out of the S&Ps. So, and it was using the divergence indicator and the divergence strategy in and of itself. Given that we were gapping to new all-time highs and we had no levels to work with here. So as you can see, there are no levels here on the screen at the moment, and we didn't have any levels to work with, so we had to work with just pure price and the divergence. So to kick this off, let's look at just the morning write-up here in general. So as we were kind of coming into the day, markets were getting a pretty aggressive gap here. As you can see, NASDAQ was up 0.87, Russell was up 1.3. And, as we were coming into, well, the plan for coming into the day was that we would stay, somewhat weak-ish yesterday, overnight session, come into today and then be able to tag 7840s and then rally from there, right? That was the plan in which we put out on Instagram on the reel and saying, hey, let's tag that level and then get a bounce from there, and we'll look to go from there, right? So with that being said, we did have a daily 1, 2, 3 in place in terms of the S&Ps. Was looking for continuation on the weekly chart, and maybe we're going to run up and tag that 5,000 on S&Ps or the 500 on SPY. But this is the big line right here. What might be a little difficult now, though, is an entry into this runaway market on a pullback that decides to actually turn, meaning actually pivot and decide to rally from that pullback. And not just keep pulling back, which is, what the Russell did ultimately yesterday, right? We talked about that off the 2004.50 level, and how we ultimately just end up, straight pulling back from that. So, and if it repeats that today, or if we flip-flop into another market that gets a pullback, then I want to be, aware of that happening. I want to, be mindful that, hey, we are getting a pretty decent-sized gap up here. It could potentially fail. We are at new all-time highs. I wanted those things in the back of my mind, right? And the bigger piece here, too, was not necessarily with the fact that we had this news here, but the biggest thing I'm watching is that overnight volume is only 180,000 contracts on the S&Ps. That's one of the things in which I put in the write-up every single day. I have a guideline rule for myself of where I want to see volume at in the morning by a certain time. And if volume doesn't reach that, then I'm not technically permitted to be able to trade the S&Ps, the futures on the day. And depending upon if there's another setup available or not, I may be completely restricted from trading altogether on the day. And 180,000 contracts, it's plenty, which is what I wrote here. But given the size of the move, I would have expected a little bit more. So what I want to do with that information, I'm not quite sure just yet. But that was one of those things I was kind of adding into, the back of my mind here in terms of what this price was, in terms of what price was doing here in the morning. If we scroll on down here, you'll see this is the bigger piece from in terms of like trade plan ideas. And I guess I forgot to put in the levels here this morning, the little shared toss link. But essentially saying, hey, the Dow is the weakest, Russell's the strongest, but NASDAQ is the gap to new all-time highs, just based on percentage changes here. An early morning divergence for a long would be ideal, and then just hold it for the day. So this is my plan right here. This one line essentially is what gives me a reason in which to be able to take the trade in which I did here. And, basically running through and typing all the rest of this stuff out as well. So the overnight swing here in snow, which ultimately I did end up closing that full position out here, was cut some at the open. and then look to see if we can get that 215 target. I punched this one in on the Instagram channel as well. I don't really know what to call that. It's just the market hours channel on my Instagram, kind of like a DM message thread that only I can send stuff in. And essentially, looking at under 208s or under 207s there for an exit once we got back up through the opening print later on in the day on that one. So that one ended up working out really, really nicely. Entries were like $1.11, and highest fills on exits I think were 350s and change, something like that at the open. I think it traded 390s on the highs, maybe 420. No, I see 420s I think on the high of the day for that contract for the 210s. So overall, worked out to be a pretty decent trade, but the S&P trade ended up being really, really nice. So let's dive into that one here. And we did add a little bit of Netflix on today as well. The 590 calls, we picked those up for about 65 cents. And I think they closed at like 35, 40 cents, something like that. So they're down a little bit here, but a small lotto position to start on that. So now that we've got those things out of the way here, let's take a look at the chart. And just to point out, I want to just, here's the trade in which I took, which was ultimately in the S&Ps here. And I took a long off of 49.13s. My entries were 49.13s right here. We'll go ahead and just, maybe. Boom. I went ahead and got in on this bar. As you can see, this bar is 10.10. That's the start of this bar on a 2-minute chart. And I got out right up here at 30 quarter. Oh, that doesn't click. There we go. So my entry here, 49.13. My exit, 49.30 quarter. And the thing in which I want to go through with this one is just kind of, oh, hello. Okay, so I'm not exactly sure what happened there, but all my stuff got minimized here. So with this one, I really want to go through and kind of talk through, just what I was seeing here. This is the MLT Discord, and kind of talking through the start kind of leading into this trade, and then ultimately, what I was seeing as that was unfolding here. So at 9:57, you can see my entry again wasn't down here until 10:10. I just say, hey, if we get another divergence somewhere here and then can get back over opening print, we should be good. Now that's, somewhere over in here, right, is saying, okay, cool, 957s. Let's see if we can get some sort of divergence here, meaning, i.e., we need to put in new lows in something and then be able to get back up over opening print, right? That's the thing in which I'm looking for. S&Ps is acting like it wants to try and hold and pivot. I'm going to let it prove it first, though, right? That's at 9:58, and you can see we're starting to push down. So maybe S&Ps are going to get those new lows, give us that divergence, and then from there we get back over opening print. We're good to go, right? Now, in full disclosure, I thought today was actually going to be able to trend all day, right? I thought there was the possibility of, 49.50s, 49.60s, and maybe even some more, right? So as we go on down, we're talking about some other stuff here. At 10:02 here, so I've been quiet. I've been sitting waiting for a couple minutes watching. And then 10:02, I said, hey, NASDAQ could set the higher low here, or it's already set the lower high. It's kind of stuck, right? So if we pull this over here and you kind of take a look at the NASDAQ right here, 10:02s, this is kind of what I'm talking about, where we've got, here's the morning open. We've got this maybe lower high. Maybe we're trying to set this higher low here, but at the moment it's kind of stuck, right? And then I said, hey, does Russell hold the 78.40 or not is the question, right? So at the time, Russell's coming down here, right, at 10:04. Russell's like somewhere right down in here, maybe like 1990s, give or take, right? And we're getting relatively close to that 78.40s, which, again, is a very valid question, right? GC week at 10:06, NASDAQ acting like it wants to hold here. And then as we go down at 10:09, you can see S&P's on a higher low, and I kind of like the idea of lows being in. So at 10:09, that's going to be on this bar right here, right? So we've now established a couple of things, right? We've come down, we've made these new lows, and this one right here, like this is literally a pivotal piece to this entire puzzle here, if you will. I'm just going to go ahead and zoom in on like this action right through here for us. And what you'll notice is on this bar, as we push down at, give me this, as we push down here at 10 o'clock, this is super, super important, right? S&Ps make new lows. Russell makes new lows. Dow makes new lows. But the NASDAQ did not, right? This little minute detail is really, really important. Now, fast forward just a little bit further here, and what you'll notice is that at 10:10, right, and this is where I'm talking about, 10:09, S&P is on a higher low. I'm looking at the 2-minute chart at that time, right, and I like the idea of lows being in. So at 10:10, when I see the Dow come down, make these new lows with a signal, at the same time, that's also when NASDAQ is trying to get back up through opening print and potentially trend, right? S&Ps are setting that higher low. You can see where my entry was here based on the 2-minute chart right there from that whole thing, right? We've got the NASDAQ divergence. We've got the Dow divergence now adding to that. And we now have the potential higher low here coming out of the S&Ps, right? And then at 10:12, I'm talking about, maybe later where NASDAQ gets back up over opening print and the Russell can trade down into those 7840s, right? And we could buy a pullback to the opening print for the NASDAQ is the idea, right? NASDAQ pulling back to opening print would be ideal with a YM divergence. And then right here, so at 10:12, S&P is on higher low, and I kind of like the idea of lows being in. That was the thing in which we were talking about. And then at 10:12, which is literally on this bar as we start to come back up off of my entry here, right, which my entry at 49.13 is when the Dow was making those new lows, getting the signal, right? So that's really, really important. We just were looking through that. So if you need to rewind the video and go back and pull up this chart right here, or you can pull up your own foregrid if you want and kind of follow along here. That was the catalyst. That was the entry mechanism into this. S&P's higher low, NASDAQ divergence, and then boom, 10 minutes later we get a Dow divergence, and all of these things kind of come together, right? So, anyways, yeah. Then we get all of these things here. I mentioned, S&P's, NASDAQ, I think can trend today once we get back over opening prints. We'll go ahead and, go on down here. We got a NASDAQ divergence here on these highs. I think we can fight it off, though. That's at 1022s. As we come on down, and let's see if we can find the exit here for the NASDAQ, or for the S&P, sorry. Boom. Okay. 1043, 17 points on S&Ps here, thinking this push is worth the trim. And then 1045, which would be right up in here on this bar, as you can see the timestamp on that. All right, lock some S&Ps or NASDAQ or whatever you have, right? So if you were long anything off of the whole situation, start to finish, this is basically 1010 entry to call it 1045 for easy math. It was about a 35-minute trade, start to finish. Now, again, this 49.30 quarter, I'm just up here for an exit purpose, right? So at that point in time during the day, we managed to pull out 17 points, 17 and a quarter points on this trade, right? And the 49.30 quarter was just an arbitrary number. We had a big push up here. We were getting a bit extended. We had the NASDAQ pushing up through those highs, all of the things. And at the same time, too, right, is when this was taking place, we were setting potential lower highs here, out of the Russell and the Dow. And at that same moment in time, right, we also had the Dow back into its opening print. So I've talked a lot about opening print, both in the S&Ps and the NASDAQ and the Russell and the Dow and individual names. Opening print is extremely, extremely important, right? It's literally a free gift from the trading gods every single day that you can look for opportunities from, right? And if we go in here, like, boom, there it is. There's the opening print for the NASDAQ. Here's that pullback, right, that I was talking about in the chats that we were just looking at. Hey, maybe when Russell comes down into 78.40s, or if the Dow gives us some sort of divergence, we can buy a NASDAQ pullback to opening print, right? Now, again, I'm forecasting that move, an hour and a half, hour and 15 minutes prior to it ultimately ended up happening. Now, we don't get the test like we were expecting out of the Russell or the Dow. But once we get that opening print pullback and test and we have the trend in place, this thing bounces 100 points out of the NASDAQ, right? Now, again, we ultimately end up failing from up here, and we come down and, make new lows on the day, right? But if you get a 100-point trade, right, there's no reason you should turn that into a loser in any way, shape, or form out of the NASDAQ, right? And to further that point, right, there's another divergence, right, on these highs. Like NASDAQ, S&Ps are making new highs over here. Russell and Dow are not, right? Russell is actually leading us lower on the day, right? This is one of those things where I was talking about here about the flip-flop action, right? From this morning push where we got out, Russell was never able to get back through this high, right? That's an extremely little valuable piece of information right there, right? Just the fact that was unable to happen throughout the rest of the day was like, okay, cool. Russell probably wants to trade 78.40s there. So yeah. Anyways, a lot of little details in this trade and kind of everything that was going through that, and we could, probably make this video another 15 minutes long here, breaking down even more things in which took place from the day and more things in which, you could have participated upon and what that would have ultimately looked like. But to bring it back to this trade right here, I want to piggyback off of something we were talking about in last night's video, yesterday's video here, in terms of risk, right? So I used my main, essentially, two strategies to this without the levels being there, right? So I just used strictly the divergence strategy in and of itself, as you guys saw with the signal, in order for me to get into this trade and find my entry right in here at 49.13s. Now, when I took that entry, I did the same thing in which I did from yesterday off of the Russell here in terms of risk, where I gave this thing a 2-point stop. So this low ultimately ends up being 49.12s, which printed before I got my entry. So I actually got my entry as we started to come back up off of 49.12s and was able to get that at 49.13s. So I literally had maybe from the time I hit the buy button, I got filled at 49.13s. It might have ticked 49.1275s, 49.1250s, but it never came back down, at least from me watching it, never came back down to 49.12s from my entry. So I realistically only took about $25-ish per contract worth of drawdown, right? It might have ticked down 2 ticks from my entry. Phenomenal, right? It's when you can get a trade that does that, you're it's golden, you're good. My only job at that point, and your only job as a trader, is then to just manage this trade effectively, which we talked about some of the reasons why the exit up here at 49.30 quarters, and all of those things. But with this, to go back to the piece I want to talk about, my 2-point stop on this, right, of $100 per contract, right? S&P's moving $12.50 per tick increments. There's 4 ticks to a point. That's $50 per point, 2 points, $100 per contract. Now, I had multiple contracts on this, right? My $100 risk per contract here, and we'll just go ahead and pull this calculator over just so you guys can see this, from 17.25 points on the S&Ps times $50 per contract ends up being good for $862.50. If we divide this by my risk metric here of $100 per trade or $100 per contract, it's good for 8.6 Rs. That's huge. 8.6 R trade is like, it makes the week. So, which is great, right? We were given the opportunity yesterday, and here's the thing I want to kind of like hone in on with this, right? Is we were given the opportunity for that yesterday in the Russell, and it just didn't work. We trailed out for an R and a half, right? 1.5 Rs yesterday, but then we hit 8.6 Rs today on this trade, and it literally makes the entire week. Now, again, we had to sit for 40 minutes this morning just watching, waiting, digesting the information on top of, the 40 to 50 minutes that we were sitting and watching pre-market, putting together the plan and all of these things. And then we had to sit inside of this trade for 35 minutes and not push the button to get out, right? Not sell on this pullback thinking that it's going to go lower from here. Not wanting to sell here thinking it wants to go lower. Not taking profits at the opening print. Not taking profits when we cleared overnight highs up here at like 24s and change, right? All of these things, and just allowing the market to then tell us when was an appropriate exit on this trade. Now, again, if we'd have gone from 49.30 quarters on my exit and just straight up to 49.50s, that would have sucked, right? That would have been a bit of a problem here, right? And a bit of a problem meaning just like, okay, yeah, maybe I could have done something a little bit better on that, right? The key thing on this, though, that I want to point out, much like yesterday, right? My exit from 49.30 quarters, I'm looking at this and going, okay, there's a high probability we're going to pull back to opening print here at 49.2350s, right? If we do pull back to 49.2350s here, that's a 7-point pullback. That's 3.5 Rs from the highs, right? And maybe it needs a little bit more, which ultimately it does, right? It pulls back here to 49.20s. That's 5 Rs worth of pullback on this trade. I don't want to sit through 5 Rs worth of pullback. Like, that would be a tough pullback to hold through just from a risk metric standpoint, right? I take a trade from 8.6 Rs and I hold it all the way down to only up 3 Rs on the trade. And it's like, I probably should have cut this at 49.30 quarters, right? And that's where those mentals start coming into play and all of these other things, which we can save for another video. This video is now 23 minutes long. So yeah, anyways, this one ended up being like a freaking trading course and a half inside of this whole video just now. But hopefully that helps you guys. Hopefully you can see just a little bit more insight into what it is I'm thinking, what it is I'm watching. The patience aspect that comes into ultimately waiting for your trades, your patience aspect when it comes to holding and managing your trades, and then as well, just this divergence strategy. So even if you guys don't have the indicator, the strategy, like I've shown it, right? I haven't given you guys all of the little nuances and details of how I use it from a strict entry and exit standpoint and all of these things. But the baseline of the strategy and what to be looking for by now, if you've watched essentially the last 3 videos here on YouTube, or the other videos that specifically say the divergence strategy inside of them, you should understand like 99% of the strategy, right? You should see what that is that we're looking for, and that's ultimately my goal here with this video and breaking down this trade and all of that. So I will wrap it up here. Again, if you guys are still watching, thank you. I appreciate it. Hit the like button, subscribe if you haven't, and I will catch you guys on the next video. Peace.